Welcome to our video on cryptocurrency vs traditional banking, the race to financial revolution. In this exciting discussion, we will explore the clash between cryptocurrencies and traditional banking systems, analyzing the potential impact each can have on the future of finance. So, let's dive in. Cryptocurrency, an introduction. What is cryptocurrency? Cryptocurrency, a digital or virtual form of currency that utilizes cryptography for secure transactions, has taken the world by storm. The most well-known cryptocurrency is Bitcoin, but others like Ethereum, Ripple, and Litecoin have also gained significant traction. Unlike traditional fiat currencies, cryptocurrencies are decentralized and operate on a technology called blockchain. This enables peer-to-peer transactions without intermediaries like banks. Advantages of cryptocurrency. Cryptocurrencies offer several advantages over traditional banking systems. Firstly, they provide enhanced security through decentralized blockchain technology, making it challenging for hackers to manipulate transactions. Additionally, cryptocurrencies promote global financial inclusion by enabling individuals in underbanked regions to access financial services. Furthermore, transactions conducted using cryptocurrencies are often faster and more cost-effective compared to traditional banking methods. Disadvantages of cryptocurrency. Despite their benefits, cryptocurrencies also present certain challenges. Firstly, the volatility of cryptocurrencies can result in substantial price fluctuations, raising concerns regarding stability and long-term viability. Moreover, the anonymous nature of many cryptocurrencies has raised concerns regarding their potential use for illegal activities such as money laundering. Additionally, as cryptocurrencies are still a relatively new phenomenon, regulatory frameworks surrounding them are still evolving. Traditional banking, the established system. What is traditional banking? Traditional banking systems, which have been in existence for centuries, primarily rely on centralized authorities such as banks to facilitate financial transactions. These systems operate on a framework of regulations, checks, and balances, ensuring safety and stability in the financial markets. Advantages of traditional banking. Traditional banking systems offer familiarity and stability for users. Bank deposits are generally insured by government agencies, mitigating the risk of loss. Furthermore, traditional banks offer a range of services such as loans, mortgages, and financial planning, providing personalized solutions to individuals and businesses. They also typically adhere to rigorous regulatory practices, enhancing transparency and accountability. Disadvantages of traditional banking. While traditional banking has been the bedrock of the financial system, it also has drawbacks. Firstly, traditional banking systems are heavily reliant on intermediaries, leading to slower and costlier transactions. Additionally, access to traditional banking services can be limited, particularly for those in underserved regions. Furthermore, individuals may require extensive documentation, have limited control over their funds, and be subject to centralized authority, limiting overall financial empowerment. Revolutionizing the landscape. Competition and collaboration. The rise of cryptocurrencies has prompted significant competition between traditional banking systems and these decentralized digital currencies. However, we are also witnessing collaboration, with several banks exploring ways to integrate blockchain technology into their operations. This indicates an acknowledgement of the potential benefits that cryptocurrencies and blockchain offer, even within traditional banking systems. Implications for the future. The clash between cryptocurrencies and traditional banking systems has the potential to revolutionize the financial landscape. If cryptocurrencies gain wider acceptance, they could disrupt traditional banking, leading to increased financial inclusion and decreased reliance on intermediaries. On the other hand, traditional banks could adapt to this changing landscape by leveraging the advantages of blockchain technology, creating a hybrid system that combines familiarity and decentralization. As we conclude our discussion on cryptocurrency vs traditional banking, the race to financial revolution, it is clear that both systems possess unique advantages and disadvantages. The future of finance likely lies in a combination of the strengths of each system, as traditional banking adapts to the potential disruptive force of cryptocurrencies. We eagerly await the innovations that will shape the financial revolution ahead. Thank you for joining us.